Welcome back to Ultimate Trader. Got a request from a new subscriber for Dogecoin. So thanks to everybody who's new and subscribed. Really appreciate it. And we're going to cover a few things here. So overall, there was some news today about one of the meme coins literally going to zero. So kind of felt appropriate to do this one. Now, I don't think that's going to happen to Doge. That's not my prediction here, but I just want to caution everybody on these things. I think it was based on Squid Game, the television show or Netflix show. So anyway, the coin literally went to zero. So not sure what's going to happen with that. But Doge has a lot of support, of course, from Elon Musk, and I think it's a much more stable coin. So, here's a daily, and I've drawn in some support levels and some resistance levels. And this, for TradingView, it only goes back to April, back to here. So you won't see the, the rise up to this level, but for our purposes, it's fine. So, the first area of support would be around this 23 type area right here. That's where I would initiate a long, looking for, 34-ish, 33 to 34. And then, of course, there's this area, which is the support that's really crucial to hold. That's around the 16 to 17, possibly up to 18 type area, where you would definitely, if you're looking to buy Dogecoin, this is exactly where I'd want to do it. But I think this is reasonable too. And, hopefully we could see something like 43s again, if not, back up even higher. So, I just want to caution on risk because of what happened with the Squid Coin thing. So I put in this reward to risk feature that TradingView has, which I think is really good. So let's go to the 1 hour chart just really quickly. Okay, so you can see this green and red area, hopefully. So what this does is it tells you what multiple of your risk you can get if the trade works. So we don't know whether the trade's going to work or not, of course, but we want to enter at levels where if it does, we get much better than, 1-to-1 or 2-to-1, because that makes the trade worth it. Because, of course, if the market comes down here, we don't know whether it's going to work or not, right? But what we want to think, that the way we want to think is that if it does work, meaning that you don't get stopped out. This is another thing, I know it's impossible to defend against a coin going from whatever this Squid game coin was to zero. You kind of can't defend against that, right? Because it's just gone, the second that happens. So first, you don't want to be using a ton of money on something, and the term a ton of money, it's individual. Everybody's different. Everybody has different account sizes and appetite for risk. So there's the whole idea that it could just go to zero, just like the other one. But in this case, I don't think it is really a possibility anytime soon. So we want to be looking at what kind of reward to risk we're getting on the trade. So let's assume that the market comes back down. It's trading 26.85. It gets back down to our support level here. We enter long right around this 22. You can see it's in gray here, 22.79, somewhere around there. And, we'd want our stop somewhere down around 20 cents, right? Now, if it does work, right, where can we expect the next resistance to be? Well, I have the main area of resistance. We'll see it's a little clearer on a daily, but up here. But even if we were being really cautious, right, we weren't even trying for this resistance zone, and we said, look, we're going to get out at around the 32 cent area, approximately. Well, if the trade works, you'd be risking, basically your 280 of risk, 2 cents spot 8 of risk to make, and you can see right here it says reward and reward ratio, risk reward ratio of 4-to-1. So meaning if it got to up here, which is very conservative, right? We're not even waiting for the resistance zone. So it could be 5-to-1 or higher. if it did work, you didn't get stopped out or exit the trade if it went down here, which you should, because the whole point is trying to measure something. And if you just ignore the risk, then it kind of throws the whole idea out the window. So you'd be getting, you can see here where it says 4.01, right? So that means that this trade, assuming it works, or not assuming it works, but if it does work, even to a very, very conservative area up here, you'd be getting 4-1 on your risk, right? So some of you might play poker or understand this, but let's assume you have a 50-50 shot of this area holding, right? And we don't know that, but we're trying to make an assumption that, we want basically that we want to be able to somehow measure the reward to risk. And if we're just giving it a 50-50, or even if it's 40% to hold, if you're getting 4 times your risk on the times it works, it's worth the trade. I hope I'm being somewhat clear about this. It's just the basic math of assuming it's 50-50, if you were to flip a coin, and heads you win, tails you lose, well, in the ones you lose, you're only risking whatever your dollar quantity is. So let's say you're risking $1,000 or $100. So in the $100 trade, if you lose 100, and if you win 400, right? So that's the whole concept of it. Hopefully I'm not too deep in the weeds for you guys, but let's just go out to daily really quick. Okay, so you can see this daily chart. So that's the area I was just talking about. You can see the reward to risk thing still comes up. It's not visible on the screen. I just have to hover my cursor over it. And then, of course, down here is the more conservative area of support, where if you're bullish and this trade didn't work out, a completely independent trade would be completely valid here too. We might see even back up to this 43, 44 area, and potentially even higher, right? So you can see that we're kind of hovering in the lower area of the entire sort of chart range, right? So that's why I was saying here, it's pretty conservative just to even get up to here, right? It's not that crazy. And so that's where the 4-1 comes in. And I have it put in like that because it's very, very conservative, but you could have it up to here, you know what I mean? And make a larger stop. Now, larger stop doesn't mean risking more money. It means you buy less, still risk the $100. It's just that your stop has to be wider, right? And then if it gets down here, you could consider another long. Got to keep repeating that this is not financial advice. And the video's probably gone too long already, so we'll cut it short there. Guys, let me know your thoughts. Thanks for subscribing again. If you are a subscriber and want to drop a symbol, could be stocks, could be currency, crypto, could be anything. So, and if we can, we'll take a look at it. So feel free to drop a comment in there with the ticker symbol, whatever it is, and we'll try to get to you as much as we possibly can. All right, we'll talk to you in the next one.